Hey there, Matt Tews with Home Loan Basecamp and Mason McDuffie Mortgage, wanting to give you a little information on what it is that underwriters really want to know about you so they can make a decision on if you can have a loan. So to start off with, here are the 4 C's of underwriting. This is what guides an underwriter to their decision. It's capacity, credit, cash, and collateral. Starting off, capacity means what are you capable of handling as far as debt compared to your current income. So all of your debts, including the new housing payments, compared to your current income, and that's your debt ratios. Credit happens to be your Fico score and all of your history. So the underwriter is going to look through your credit history, mortgage payments if you've had them, car payments, just about everything that shows on a credit report. They're going to look at Fico score, and in some cases the Fico score is going to determine if you can have a loan, number one, and what your interest rate may be. So the FICO scores are determined by 3 different credit bureaus. The 3 different credit bureaus, the underwriter is going to take the mid score of those 3 credit bureau scores. So it's the statistical prediction of your borrower's future payment likelihood. Cash. Cash is not Johnny Cash. We're talking about how much money have you got, and the cash portion of this is what you're going to put down, how much money you have for reserves, and how much money you have for the closing costs. So in totality, there are loans where you absolutely no cash at all, and there are loans where you may benefit from putting a lot of money into the transaction. So that's the cash piece. And the last one's collateral. Collateral has to do with the appraised value of the home and what the home is. So the truth is, a underwriter is going to try to protect the bank or the investor. So they're going to look at this home, and as long as the appraiser determines that the appraised value comes in at a point where your loan to value ratio, so it comes in where you need it to be, they're going to be fine with the loan. They want to know that the home's going to be worth something, so you either have skin in the game, they know what they're lending on, and in case you go into foreclosure, they know what they could sell the home for. So those are the 4 pieces that create the balance of risk for the investor. Now, if one of these are not so great, let's say credit is not the biggest, best piece in your life, the other 3 may still hold that stool up. So why don't you give me a call? We can talk further through what the 4 C's of underwriting are if you'd like to go through it, and I hope this helps you. All right, thanks a lot. This is Matt Tews with Home Loan Basecamp.